activities in the Nigerian equities market saw mixed sentiment as investors positioned on some largely capitalized stocks. Damilare Ojo, research analyst at Meristem, joins me now to wrap up the equities market. Thank you so much for your time today, Damilare. Quite an interesting time we're seeing play out here in the markets, looking at the second quarter so far. But in terms of this week, though, what has been driving the sentiment for investors?
Thank you very much for having me, Kenneth. On a general note, I mean, the market has been recording increase in the index. You've been having gains across, I mean, on the Nigerian equities market. But the major factor that has been driving, the growth the increase we've been seeing is really some corporate actions, particularly with regards to some large cap stocks. So, for instance, you have Airtel Afri and you have MTNN having their PSB license coming into operation, and that is one major factor that has been leading investors to record buying interest. You've been seeing buying interest into these large cap stocks. Also, you have on the equities, I mean, in the fixed income space, you have very unattractive yield until recently when the MPC increased the MPR, that's the monetary policy rate, which then triggered an increase in yield in the fixed income market. So because right now real rate of return is still very much negative in the fixed income market, and that is one other factor that has been leading to that interest in the equities in the equities market. So that's those are the major factors that have been leading to.
Because I wanted to get to that area around the opportunities we're seeing in both markets. That's the fixed income and the equities here. And in the medium term, though, how do you see things panning out?
Well, as it is now, I think the focus of the monetary policy is going to be on taming inflation. That's a global trend now. Inflation is rising to years highs. And for Nigeria as well, it is now a reality that we can no longer retain our MPR at 11%, and that is what has informed the decision of the MPC in the last meeting. And just to say that the increase in the MPR is not just a signaling tool. It is something that was that has taken effect, which is what we saw in the last NTB's auction. So if rates continue to increase in the fixed income market, you might see sort of rotation of funds from equities, because again you are seeing a number of stocks have already reached target prices, have already been overbought. So you might see some sell-offs. We are beginning to see some sell-offs in the equities market, and since rates are now picking up in the fixed income market, that is what we're expecting to see some sort of rotation of funds from equities to fixed income markets.
All right, but as you assess the markets, what would you say are some of the bright spots for investors here, sector-wise?
Well, sector-wise, I think that the oil and gas sector has been the major driver, and the ICT as well. So for oil and gas, you see that there's been increase in the price of Brent, in the price of crude oil generally, and a stock like Seplat has been benefiting from that. Investors are pricing that into the valuation of Seplat. And Seplat, you recall, is also a large cap stock. The same thing with Airtel Afri, the PSB license, and those are some of the bright spots that investors are looking at as value drivers in the equities market, which are the things that have been really leading to buying interest. And then, like I said earlier, there's been low rate of return in the fixed income market, so that is also one factor shaping the market for equities market. So if we begin to see a pick up now, in the fixed income market, that's one thing that would also determine what is going to happen to the equities market.
All right, now looking at the quarterly performance, I'm looking at the performance of sectors here in the second quarter. Seeing for the banks, though, just not doing as well as we all expected. But what catalyst can we see to drive this? Yes, we know that earnings are still quite away.
Well, for banking stocks, there's been that muted sentiment. There's really been no major activity happening until just I think yesterday or 2 days ago rather, that Access Bank released a corporate action that they are acquiring another bank in Kenya, and I think that is one thing that is going to drive drive interest in a stock like Access Bank. But in the banking sector generally, I mean, there's been not much activity happening there, and you've just been seeing the index, a lot of stocks in that index trading sideways.
Because when you look at the top stock by volume, usually the banks usually dominate this spot, but now we're seeing, for today so far, we're seeing players like Transcorp and the Nigerian Exchange Group playing in that space now, and United Bank of Africa also in there as well. But for you, looking at the momentum in the market and how we can get this up, though, in terms of the value we're seeing in the market, what can we expect?
So I think there's been a shift of focus, right, in the market. Investors are looking a bit away from the traditional stocks, and that is why I mentioned that the banking index, the stocks there have been trading sideways rather. So investors are looking at other stocks that can drive value, just away from the normal, banking stocks, driving value, driving volume, from over a period of time. So that is what I think is happening now. Just looking at other stocks that where can we also get value, outside of the traditional stocks that we are used to. So that's what I think investors are looking at.
Yeah, okay, because another sector that I think is not performing as much as it should, especially as has done in this second quarter, is the industrial goods sector. Quite a lot of big players in there, but what do you make of how we see this play out in the medium term?
Well, for the industrial goods sector, one major driver of value really in the market generally, regardless of the sector, is corporate action. Where do investors see value? What is happening? So if you look at the industrial goods sector as well, there's been no much activity. For instance, in the first quarter of the year, we recall that Dangote Cement at some point did its share buyback, and I think that until another tranche of the share buyback is coming into the market, I don't expect any major activity in that sector. So corporate disclosure, corporate actions are the things that are going to that have been shaping the market generally. So if you don't see that happening, just means sort of business as usual, and investors are looking at other places. So I think that is also affecting the industrial goods sector.
Right, because I'd like you to speak to how we're seeing, the corporates here tap into the capital market for funding as well.
Sorry, I didn't get that.
The appetite for corporates to tap into the capital market for funding, whether it's in form of a commercial paper or other forms as well,
Okay.
and the appetite to see for that going forward.
Well, I think that it's going to be a bit. We are going to see less activity in terms of tapping into the capital markets in this second quarter and going forward into the third quarter. And the reason is that it's a bit more expensive for companies to come into the market right now. Inflation figure is still increasing, and investors are pricing that into their demand for yield. And you're also seeing the NPR, which is a reference rate, also increasing. And T-bills, bonds auction, the primary market, that's the risk-free instrument, are also recording increase in their rates, and altogether that just means more expensive funding for corporate. So I think that unless companies are very sure of the rate of return that they are going to get on whatever investment they want to use funding for to be higher than the cost of borrowing, is going to be a bit difficult. And you recall, I mean, we also note that for Nigeria as a country, we are also seeing that play out with the drawback from with the withdrawal from the proposed issuance of Eurobond because of the increased pricing generally in the global market. So I think that's also what we are having in the local market. So I don't expect a lot of corporates coming into the market to raise funds as much as we saw in the first quarter of the year.
All right, but for you, finally looking into the market going into next week, what's that thing that you're expecting in the market?
For me, there's going to be, there was a T-bills auction yesterday, and they generally still saw that, although there was a bit of decline, but you saw that. I mean, what the result showed was that there is still a lot of interest in the market, and investors are still demanding for higher rates. But what do we expect for the markets? I think there's going to be that shift of interest from a lot of shift of interest from the equities market. We are beginning to see a lot of sell-offs in the equities market. Like I mentioned earlier, a number of stocks have been overbought, and you are seeing yields becoming a little more attractive, although not yet very attractive, a little more attractive in the fixed income market. So I think there's going to be that higher interest in the fixed income market relative to the equities market. So I expect that into next week, you might see the equities market lose some points, while the fixed income yield is going to increase.